Good morning. It's Wednesday, March 20th, about 6 a.m. Central Time. Overnight, the precious metals are weaker here and stringing together a two-day sell-off. You have April gold down $3 at 21.56. May silver down 11 cents, 25.02. May copper down 3 at 4.04. April platinum down $2 at 8.98. The low is 8.91 and a half. And then June palladium down $9 at 9.90. The gold silver ratio at 86, ticking up from 85. I said that the gold silver ratio in this kind of price band here, 92 to 1, has been the high. We bounced off of that twice in 2024, and then 85 to 1 is about that support level. So I indicated that we're starting to see some of those industrial metals weaken here a bit. Questions about the Chinese economy, and that's why I believe that gold silver ratio is going to trend a bit higher. So looking at today, the critical thing to watch is going to be the Fed. And it's not about interest rate cuts here, because if you look at the CME's Fed Watch tool, only a 1% chance that the Fed does cut rates here today. That would be a shocker, and it's most likely not going to happen. So all the questions and all the analysis are going to be around Jay Powell, his speech here, and also the dot plot, where sticky inflation is probably going to show that median dot plot, indicate that there's going to be fewer Fed rate cuts. We'll most likely see something ticking down from 3. I still believe that we do have quite a strong possibility that we do see 3 Fed interest rate cuts, one in June, September, and December. And then we'll also be paying attention to the summary of economic projections that comes from the 19 members, where the officials will revise their 2024 interest rate projections just a slight bit higher. There'll be questions about the year-end forecast for employment on whether or not that will move higher as well. Bond investors will want to look at the Fed's future plans for running off the balance sheet, and will they taper the runoff. So we'll also pay attention to a lot of the key levels in the lines in the sand here as far as Treasury yields. The 2-year yield, you'll want to see that 4.72%, you'll want to see that hold as that double top on the markets. We're getting a little bit lower of a high in March here at 4.68, the 10-year double top at 4.35, and then also the 30-year line in the sand at 4.5%. So pay attention to all those individual Treasury yields on whether or not we see a breakout to the upside, because that's going to really dictate where a lot of these commodities go. We also have the dollar index pushing up, and that's at one of the highest levels here since February, 103.76. So looking at the chart patterns here and some of the different key levels on the precious metals, what I'll do is I'll print off all the charts, come up with my analysis on there, trade your plan, map out your plan, and stick to your plan here. I find that to be the best way to trade in these commodities. I said that on the gold market, your kind of key level of support is going to be backwards for you, 2150 to 2145. Throw those lines. That's your pocket support on the gold market. It is drifting lower. I think you're going to need to see a big sell-off here in the dollar index to get that market back over 2175. That'll reignite the bulls. Silver, I'm looking at possibility of a head and shoulders pattern on that market. We've got that shoulder from the March to mid-March where we had the breakout to the upside. That 25.66, that's the top of your head here, and it looks like that critical level support, that 24.92, 93, that's kind of your line in the sand. We break there, could sell off, form that right shoulder you don't want to see. Palladium, I did warn you yesterday, looked like a big sell-off was going to happen here. We did get that 2-day big sell-off. Palladium, or platinum, it's unfortunate because we drift higher and we take so many sessions to build on that chart pattern, only to have a failed breakout to the upside and a rug pull here down to 894. That's where I told you was that critical level support. The copper market looks like a much more aggressive head and shoulder pattern. So you look at Bitcoin, a lot of us pulled off quite a bit of the Bitcoin, the Ethereum yesterday. Bitcoin down 8.5%, Ethereum down 10%. Line in the sand, Bitcoin 59,300, but it's going to be an asset class that you're going to want to pick up, add some here. CME's got a great product here. It's 1/10 of a Bitcoin. You could kind of stash a little bit of that away. We've been going out April and June on those contracts. So crypto market cap yesterday fell 8.2%. Ether fell 10%. Bitcoin down 8.5%. You get over 69,000, that's going to reignite the bulls. On the Ether market, it's going to be 36,000. Will reignite those bulls as well. You go to the chart patterns on the stock market, S&P 500 closed at an all-time high. The Russell index looking pretty weak here. 2041, your critical level of support. That also coincides with 2035. That's the 50-day moving average. We break below that, could be a big washout here on the downside. The NASDAQ, neutral trend at the moment. You got to get it out 18,560 to reignite the bulls, and then 17,900 will be a rug pull on the bear side. So a couple markets that I am looking at here on the grains, the corn, the soybeans, and the wheat. The wheat looks like it could break out to the upside over 450, or I'm sorry, 553. You got an easy stop placement here, 524. Corn 442 and beans 11.99, all for breakouts. So I'm giving you more levels here. That's what people were asking for in the last couple videos. What are the critical levels that I would take some action in these markets? I am going to be on the Schwab network here this morning. 7:06 is where I'll be on till about 7:15. Then I got 2 TV spots with the CME that will be posting a little bit later, covering your metals and also your energies. You got any questions, you shoot me a call. We'll be building some smaller positions, but because of the fact it's the Fed day, you don't actually have to do anything in these macro markets. It's not like you got to go all in. I see people do that all the time. And then the Fed disappoints, dollar index rallies, blows you out in the metals, and then you're done. What did that prove? The point on futures trading, you want to take small gains, small losses, and then you find a trend and you try and catch that trend higher. Catch 80% of the trend, then you chop around for a while, you try and catch another trend for 80%. That's how you really build, protect, preserve that account in your wealth. So you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.